Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are going over the macro and the short-term charts moving into FOMC, which is in just under 48 hours. We are going to be discussing exactly how the charts are shaping up, what the macro charts are suggesting for next potential moves, and how those short-term charts are developing moving into this major economic event. We'll also briefly be going over the broader cryptocurrency markets, the altcoin markets, and even touching on the global liquidity index, as I have had some suggestions to discuss that. I'm going to be discussing why I don't think it is something of absolute significance we need to be discussing, and I'll be backing that up with some data. Now, before we get into it, go ahead and smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us in Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP. You can do that by clicking the pinned comment in the free channel, clicking the contact link to contact the admin, click the first link to see a 50+ month trading track record, and the second link to watch a 10-minute video showing you inside the channel. You'll get access to two channels: the main VIP trading channel, where trading setups with exact entries, targets, and stop losses are posted. You'll also get access to our group chats, our general chat, our trading chart and education chat, our daily video help, news chat, and community setup chat. If that is what you're interested in to join over 700 members, you know how to do it. Contact the admin and we'll see you in the channel. Let's dive into the content. So as we can see, in just under 48 hours, we have got the FOMC meeting. And this FOMC meeting has been a widely anticipated meeting now for quite some time, particularly as we have seen a bit of a downtick for the market moving into this meeting over the prior weeks. This meeting is going to hopefully shine some light on the expectations surrounding future interest rate decisions, which will likely and most probably help the market get out of this rut of uncertainty, which has really been pushing the asset market down now for quite some time. The FOMC meeting is expected in 1 day and 18 hours, and the current probabilities are still sitting at 98% for an interest rate pause and 2% for an interest rate reduction. We'll come back and discuss what this means in just a moment. But going over what we'll be discussing today, we are taking a look at, of course, our daily RSI trendline, the short-term price action, the current short-term bounce we are seeing. We'll also be going over our weekly levels, our 50 EMA, our RSI, our Gaussian channel indicator, as well as going over the total market cap and total altcoin market cap, and even discussing the M2 global liquidity index in relation to macro projections for Bitcoin, how it can be used, what it means, how reliable is it, and what timeframes is it best suited for. So let's start on the market data, 24-hour volume and liquidations. Taking a look at our 24-hour volume, it is sitting around 0.4% up for the last 24 hours, so not that much change, 140 billion, with liquidations down 38%, and we have seen a bit of a reduction in volatility, with 156 million in liquidations, 103 million coming from shorts, 52 million coming from long positions. Moving over to the DXY, it is currently retesting a midline. I do expect a reaction from this midline following the FOMC meeting, watching very, very closely. The S&P 500 actually showing some strength over here, moving into the FOMC meeting. Now, we discussed how the prior weekly candle close was a terrible weekly candle close. We saw a loss of the 5,700 level. We saw a loss of the 50 EMA, and we discussed how this particular week is the week we need to see strength flow into the S&P 500, and we need to see this week turn green, and we actually have to see it break back above that 5,700 level. Not only break above, we need to see it sustain above, and for it to sustain above, we need to see a bullish FOMC meeting. So let's discuss that very briefly. For us to see the markets rally for both Bitcoin and for the S&P 500, we need to not only see on the interest rate decision we need to, well, ideally we wouldn't want to see a reduction, right? That'd be the best case scenario. It's only 2%, so the probabilities are very, very low. It is more likely we're going to see a pause. But in that 30-minute meeting following the FOMC decision, we need to have a bullish tone in that meeting. If Jerome Powell has a bullish tone, if he discusses how inflation is likely moving closer to their target at a better rate than expected, if they discuss the potential for future interest rate cuts happening sooner than expected, or even if they discuss the potential for more than 2 interest rate cuts, which was originally expected in a future period, that and all of those potential scenarios could result in the market rallying and could result in the price sustaining above these weekly levels, both the weekly levels for the S&P 500 and the weekly levels which we'll discuss in today's video for Bitcoin from a technical and a structural perspective for the rest of the market. So a very important 48 hours, actually probably the most important 48 hours so far of 2025 in terms of macroeconomic outlooks, and I look forward to touching on that after the data has been released. But let's get into the crux of today's analysis, guys. Before we do, if you're interested in supporting the content, you can go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll not only support me making the content, but you'll support yourself in your trading journey. You'll trade on exchanges I trust and I trade on daily, and you'll get a lifetime trading fee discount of 15% off all your trading fees, which can build up to 45% based on your trading volume. You'll also, as a consequence, by signing up to any of the exchanges, or if you've already signed up to the links, you'll enter our $3,000 giveaway. More information in the Telegram channel. We'll play an ad and we'll jump back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and get stuck back into the video, and I want to start by talking about the M2 Global Liquidity Index, as a lot of people have been talking about what is happening with Bitcoin's price action in relation to the massive surge in the M2 Global Liquidity Index, indicating or suggesting that this could be a leading sign for Bitcoin to have this massive rally toward the upside, following that of what this indicator is suggesting. Now, first and foremost, we have to understand correlation coefficients. The long-term correlation coefficient from around May 2013 to July 2024 on a weekly scale, on the macro scale, shows it exhibits a very strong positive correlation with Bitcoin around about 94%. So we are massively tied to the direction of the global M2 liquidity index. There is absolutely no doubt it is a fantastic indicator for the macro of risk assets. However, when we are looking at 12-month rolling periods or smaller timeframes on the daily, the correlation begins to fall. In fact, the correlation actually, correlation coefficient actually drops down to 51%, meaning there are many instances during a 12-month period where we do see an inverse correlation, or almost an inverse correlation, where we have these extreme and sometimes not so extreme deviations from the trajectory of the M2 and the direction of the risk asset price. Now, the reason why I haven't discussed that aggressively, why this is significant, is because if we look at an even smaller time frame, such as a 6-month rolling period, the correlation coefficient declines to an even lower value of only 36%. That implies that short-term price movements are more influenced by specific factors relating to Bitcoin and the global economic conditions, such as interest rates and then these liquidity conditions. So it is not something we should write off, but it isn't this major, massive event I think a lot of people are blowing it up to be. And even if it were, the issue with relying on things like this is that they are not actionable, meaning this doesn't provide any actionable information that we can actually quantify and utilize in our analysis. It doesn't tell us when Bitcoin will turn around. It doesn't tell us by how much Bitcoin will turn around. It doesn't even tell us if this actual movement will be 100% respected, as it doesn't have a 100% correlation on these 12 to 6 month rolling averages. So that is why I haven't discussed it too much. I'm not trying to brush it off. We understand the global liquidity index has a massive strong correlation to risk assets on a higher time frame, but when we're looking at specific movements within the broader data, these 6 to 12 month rolling averages are not always going to be strongly correlated, and also it doesn't provide us actionable information I can sit on here and provide that we can actually apply to our individual decision making at the immediate time. There are much better data sets we can actually use, such as economic projections, such as perceived systematic risk analysis, that we can use to actually make decisions in the real time that give us more actionable and again, give us these actual invalidations. So yes, it's something that's important. No, I think it isn't significant for the short term. Yes, I think people are blowing it out of proportion. It's just a massive talking point influencers are going to use. But in reality, as a trader, it is not something I'm going to be looking at that aggressively, other than the fact that we already know it's a strong correlation on the higher time frame and we can track it on the higher time frame. But in terms of actual individual decisions we make on a day-to-day basis, which goes to, strengthen our overall profits or, worsen our positions, hopefully not, it's not going to be that actionable, and therefore it's kind of irrelevant on that perspective. So that is it for the global liquidity index. That is my take on it. A lot of people are going to disagree in the comments. Again, you can go ahead and disagree all you want. I actually have a background, a tertiary education in economics, so I do have a lot of information in this I can yap on for a very, very long time. But in terms of trading, what is applicable to trading, it's not something I'm looking at. So let's move over to the rest of the charts. Let's take a look at our macro charts. First and foremost, there are a few key levels we are looking at. We've talked about this before. A major level we are looking at is going to be the weekly RSI on both Bitcoin, the 44.64, the 50 EMA on Bitcoin, which is sitting at the point at which we retested that horizontal RSI point, and the upper band of the Gaussian channel, points we are watching very, very closely. Now, we know that a loss of the 50 EMA on the weekly will essentially be the first time we would have dropped below it ever since we basically sustained and broke through all the way back at mid-2023, which essentially formulated or started what you would call this aggressive bull run, right, that we've been in for about a year and a half. The loss of the 50 EMA, if we do drop below the weekly, would be the first instance where we've actually seen a breakdown below and close below for over a year and a half, and would signify a dramatic shift in the overall macro strength of the price action. Furthermore, a loss of the 50 EMA would actually also result in a breakdown of the 44.64 on the RSI, indicating a major negative momentum shift. Again, looking at the price action ever since we've sustained above this region. In fact, when we first broke above this region back in January 2023, that is when the downtrend, the bear market, officially actually ended. Right over here is when the bear market ended, as we broke out of a bullish consolidation structure at the end of a major downtrend, signifying a macro trend reversal. So we've actually technically been sitting above 44.64, not only during the entire duration of the bull market, but since the end of the last bear market, which is why the 50 EMA acting as a trigger for the loss of the 44.64 is going to be a major directional trigger point for the broader markets, for cryptocurrency and altcoins if we lose. So we can understand the significance of this. Furthermore, if we are looking at the Gaussian channel indicator, a loss of the upper band of the Gaussian channel, which sits underneath the 50 EMA and might actually creep up to retest the 50 EMA by the time we retest, if we retest it again, a loss of the upper band of the Gaussian channel very commonly results in a retest of the midline, if not a correction all the way through the lower band, which could take us to the 200 moving average. So there are some major warning signs here. There is a risk of a steeper correction. Will it happen? That entirely depends on the economic drivers, okay? Remember, price action is cause and effect. It is just a representation of perceived value of the asset based on developing and future expectations in economic events and other industry-specific events, okay? So it is a perception of value. It is not an indication of what is going to happen in the future. The price is just a means of evaluation. if we're looking at what is likely going to occur, we need to contextualize the developments of industry-specific developments and updates, okay, such as when we had the ETFs, okay, as well as in conjunction with developing economic events and how those economic events are perceived in the market and how those events are perceived in the market as a consequence of what we have seen historically, okay, and what we are seeing currently. So in this instance, we know that economic events such as the FOMC meeting have a direct influence on risk asset prices. We've seen it, we know it, we've talked about it. We know that if we see a bearish meeting, meaning they do not discuss that inflation is moving faster down than expected, they do not discuss the potential for more interest rate reductions, they do not discuss the potential for closer or sooner interest rate reductions, it is likely we see the market continue in the current trajectory, which is toward the downside. So that is going to be worst case scenario. Let's move over now to a 3-day chart and start talking about how the price action is consolidating and potential targets and how the price action can reverse. So as we can see, we are currently in the Gaussian channel, right smack back in the middle of it. We are underneath the midline of the Gaussian channel. The midline of the Gaussian channel is acting as a trigger point. When we break the midline, we generally, not always, we generally continue towards the upper or the lower level of the Gaussian channel. So the break of the midline could indicate a directional continuation toward the upside, which could result in a breakout of this 3-day downtrend on the RSI, which would be the initial sign of a reversal developing. As we can see already, if we move to a daily in a second, we can see bullish divergences develop in the daily, which is suggesting that this selling pressure we have had, which has really ramped up under 92,000, is beginning to dry off a little bit. People are looking to, potentially seeing this exhaustion in the selling pressure as we move into a major deciding event, which is expected, right? We see indecision begin to build, and with indecision, volume starts to drop. We can see that already. Volume is significantly dropping, and with that, we see volatility drop, and the price action begins to consolidate and chop sideways, which is what we are seeing. If we're looking at our trigger points, the lower band over here actually lines up with the 50 EMA on the weekly. So a loss of the lower band of the Gaussian channel would as a consequence result in a breakdown of the 50 EMA and thus a continuation lower. That is going to be worst case scenario. A break of the 3-day Gaussian channel would result in something very, very good, which is going to be a breakout of the daily downtrend on the RSI, okay? And the daily downtrend on the RSI breaking out is going to be the leading trigger for the breakout of this weekly downtrend we have been in. So when we're looking at, breaking it down piece by piece, these are the things we need to see in the order. We need to see the RSI breakthrough. The RSI breaking through would tell us that the exhaustion we have seen develop here, the bearish exhaustion we are seeing over here, has actually been absorbed. The bears have been absorbed and the price action has flipped back positive. The buyers are in control. That is going to increase the probability for the downtrend to break and the trend to reverse. However, what we are actually seeing now is the price action has not come up to retest the trend line. The RSI has not broken through the downtrend, and therefore this rally at the moment, although is nice, it is not enough to signify the buyers are back and the price action is going to reverse back to 100,000. When we see those things occur, then the probability is going that direction. Until then, we are waiting. Until then, confirmation is the insurance you pay to be right. That is it, guys. That is all the analysis we have to say. There's nothing more to discuss. We can quickly go over the rest of the markets. As we said already, the 42.60 lines up with the 44.62 on the weekly RSI for the total market cap. We lose this level, we go lower. The same goes for the total market cap over here for altcoins. If we do not break it back above 840 billion, we are likely going back to retest this trend line. So we can see how there are directional moves in either direction right now. And the overall deciding factor is likely going to be this meeting. So thank you for tuning in, guys. Have a fantastic day. We'll catch you guys in the next video. That is going to actually be on Thursday. That is going to be after FOMC. So we'll see you then. Catch you then. Bye.